Welcome to the Payments Trilogue, where three seasoned professionals discuss payments and more for Europe and beyond.
Hello, this is Michael Salmony, and I'd like to welcome you to another episode of the Payments Trilogue. You will know that in past episodes we've looked at lots of banking solutions. This time it's more Ralph's game. We're going to look at alternatives to bank solutions, and specifically we want to look at PIS at POS. So how could payment initiation services at a physical point of sale actually make a difference and be an alternative to the various other proposals that are out there? So Ralph, why don't you take it away and tell us what your thoughts are on this?
Yes. Okay, where to start? So we have, I think it was about 5 years ago when the European, the Commission put up their European payment strategy, how to make European payments great again. The ECB did the same. So, and then that has then raised a number of initiatives, EPI being one. I think EMSA was already around. Another way of bringing payments, getting the European side of payments more prominent. And of course, from a fintechs and a Tpt Pis perspective, we wanted to show that there's not just different bank ways of doing this, there is also open banking, bank independent ways of doing this. Which is when we started our initiative called the European Retail Payments Framework, which is not a one scheme and not for one country. It is a framework for PISPs in Europe to flourish. So what is it that we need for PIS and open banking really to work out in Europe as a framework where, as I said, different players, not just one, different players can compete and provide open banking services. So it's purely based on PSD2, not another scheme, essentially on SEPA credit transfers, or now credit transfer inst, of course. And therefore, it is about challenging the existing payment methods with superior technology and better business models. So it's not trying to build better cards or better wallets or creating another interchange regime. It is about an open banking approach to all of that. Now, we had, of course, quite some success on open banking with PIS in the e-commerce world. But of course, this European strategy by the ECB and by the Commission was, of course, had a lot of focus on how to make this work in the physical point of sale. So how can we get PISPs and PIS, the principle of open banking payments, from e-commerce to in-store retail commerce? And that's a bit the tricky bit. And the way our initiative there was explained is, of course, addressing the various objectives. There are these five top level objectives by the ECB, having a pan-European reach and customer experience. That was number one. We have others there, the convenience, of course, the sovereignty, safety and security, etc. And but if we look at the main thing from a PIS perspective, or what is it that where we have an edge, where we have something that not every payment method has. The number one thing is that we have spent 5 years and billions of making every single payment account in Europe accessible. We have 400 million plus in 27 countries. So we're not starting here with on a green field. We would not have like a few banks in 5 countries or whatever. This is the largest reach that is available. It is next to cash. It is far beyond all cards, all wallets, all EPI, all EMSA. It is by far the widest reach. Now, I'm not saying that everyone is using it, obviously not, but they could. And all you need is your bank account. So important to understand, you are not in the game. We're not in the game of onboarding all these customers. We have all 400 million with a payment account could use it tomorrow without onboarding, without signing up, without another account, without another card, without another wallet, without anything else. Just purely their payment account. So we are not having this two-sided chicken and egg problem. We already have all the consumers able to make these payments. Now we need more merchants to sign up for it and to have an interest in this, and of course make it work. And one of the problems to make it work in physical point of sales is of course the real-time aspect, because there you're really under time pressure and it has to work right away. You have instant payment certainty immediately, or a guarantee. You need to have essentially a very, very slick and fast process. You can't have long-winded SCAs and going through redirection and many screens. So that will never work at a physical point of sale. It has to be slick and basically instant. So that's why now with the instant payments becoming a reality in Europe, I think that is one of the big problems that we will overcome here in order to make payment initiation possible, because then we will not just have initiation, but we will have execution, which is the bank side, of course, that then has to happen or will happen instantly. So that's essentially, there can be very, very slick flows on SCA. I know we're not doing it the way in the best ways, but there is a lot of possibility. And let me put the other half at towards the second round here, because otherwise I'm talking too much, too long.
Yeah. I mean, there's much to like about what you say. I mean, it's been one of my frustrations, having worked in the payments industry for quite a while, that so much has happened on the mobile and on the internet and everywhere. But when I go to a restaurant, I still get this hideous terminal coming at me, which I have to insert a plastic card in, which seems like sort of 1970s, right? So this is really necessary to get some innovation at the point of sale. So, Gijs, why don't you give us a bit of feedback? Why have the banks maybe been a bit slow in actually changing that part of the payment system?
That's a good one. When I was listening to Ralph, and I love listening to Ralph, you know that. One of the things I said to a Dutch newspaper a long time ago in the context of PSD2, and we still thought it was pretty scary, because I said, exactly building on what Ralph said, all these payment accounts at one point in time, they will become accessible for payments initiation. And if there would be one party that could theoretically do payments initiation to all European payment accounts, would be a party like Google. So we said, whoa, as a threat, and that would fulfill Ralph's dream. What if Google said, okay, we're going to do payments initiation to all 400 million of these payment accounts? Because, and we had a discussion with Chris Pigna of EMSA, if the platform that wins the hearts and minds of the consumer, that owns the customer journey, well, wouldn't it be great if I could just use Google Pay to pay for my grocery anywhere in Europe and do payments initiation with any payment account in Europe, Ralph? I mean, so yes, the potential is there, but my question would be, how are we going to use that potential, those 400 million accounts with instant payments accessible also through payments initiation service? How are we going to organize that in such a way that we have a European solution and not somebody from outside of Europe pulling it off because they have a better customer journey and so on and so forth?
Right.
So what's the alternative then to Visa or Google, right? There must be a third way.
Yes.
Yeah,
so you have to organize that. You can't leave it up to individual payment service providers. So it's still a regulated business, right? It's not just banks and non-banks. It's payment service providers in various shapes and forms that play roles here. So it's still a regulated business.
Yeah, and I'm all in for achieving European sovereignty, but this can be achieved without discrimination. So sure. It is not about, in my mind, it is not about having your worldwide headquarter in Europe. It is all about playing along the European rules and under the control, basically following the policy of Europe. Mm-hmm. And so it is about here we're creating a legal framework. So we have a legal framework. We are controlling that legal framework in Europe. We are controlling the access to it. So you need to have a license under PSO. You've got to be licensed in order to get a European license. In order to get a European license, you've got to have at least a legal entity in Europe. Mm-hmm. So maybe not the headquarters, but you have to be established with a legal entity in Europe in order to get a license. And then you have to get the license. So we're controlling the access. We're controlling the standards with EIDAS, with these quality trust providers, with European electronic signature systems, and all of that. We are controlling the rails. We are having, our TIP system, central systems. We have all these European CSMs with their infrastructure interconnecting it all. So we are controlling the rails. We are controlling the rules. And I'm, looking at Gijs here, the EPC is controlling basically all the rule books of all of that in Europe. And what maybe is a little bit missing is a European identity. And I know I've been requesting this for quite some years now, that we start to establish something like a trust mark, something like a SEPA Insight or some logo, something where we can show people, or where merchants can show what SEPA payments are accepted here. So account-to-account payments accepted here. It's not just cash, it's not just cards, it's not just Apple, Google, God knows, it is SEPA, whatever logo, something like that. And that is how to achieve sovereignty and having all the governance in Europe without being a closed, like a discriminating region where no one else could come in and play ball as well.
Yeah, so where should this be? I like that, by the way. Sorry, that Ralph says. It really triggered me, and I love what you said. So we need to control the rails and the rules. That's what we need to do for our European payment solutions. That's what. Sorry, I interrupted you, Michael.
No. I was just trying to enlarge on your question, Gijs, because I think you rightly said, Google will jump on this if there's such a possibility, or Visa MasterCard will continue. Who is the organization who will pick this up, Ralph? Yeah. Right? Who will define these rules? Who will create this logo?
For PISPs in Europe, we have taken up this role as ETPPA. So we are the organization that is leading this market initiative of the PISP. So similar to EPI or similar to EMSA doing it for their version of payment solutions. So for PIS, we're promoting this here in the name of, or via the vehicle of ETPPA, our industry association.
Saying you're promoting, because to me, if it walks like a scheme and quacks like a scheme, it probably is a scheme.
No.
Why isn't ETPPA creating a pan-European PIS?
No. Hang on. Because it's not a scheme. It is a framework. So I try to explain. So the difference between the scheme is a scheme is like one commercial model. It's like one, maybe more than one company, but it is one commercial organization. And here we're talking about different companies. It's a framework. It is basically setting the rules or the possibilities, enabling PIS across Europe. Yeah. And that the scheme thing, like the EMSA model is you have all these national players, and then you have the scheme or the EMSA coordinating in the roaming agreement thing. Here we have PIS is intrinsically multi-country, so there are no national PISPs.
I fully understand, but I think we agree, Ralph. But what I mean with the scheme, you need a set of rules on how it works. Is it a QR code? What does the QR code look like, and whatnot? You need some standardization stuff.
Yeah.
You need a certain level of standardization and agreements on top of which these commercial models can be built. And you need a technical scheme, right?
Right, and you know very well, and we discussed before here, for me, this, like a pure open banking, a pure bank independent PIS open banking approach, like what I'm just talking about, will have its limits. in order to reach like the holy grail of retail payments, to really compete eye level with the best in the world, Visa, MasterCard, PayPal, etc., you need to have this collaboration. You need to have something like SPA. So that is where SPA and the collaboration comes in, and maybe, well, hopefully that SPA is maybe not just there for TPPs and banks to do on the open banking side, but maybe also could be a clue for getting EPI and EMSA and other players closer together. Because at the end of the day, I think what will it all boil down to is money, and trying to minimize additional expenditure, additional infrastructure, etc., and leveraging what we already have done. And
Ralph, can you
so
take
that's
us?
why building on top of open banking, which is SPA as the first level,
Yeah,
and then there
we
is
understand
maybe
that.
cooperation with others.
Well, what we need is a sort of journey, right? There's the framework from the ETPPA, then a scheme needs to be built, either within EPC or like SPA, and then on top of that needs to be a commercial company which takes this and makes it happen. What does that journey look like?
Well, I'm not so sure it does need that single thing. So I'm more into more diversity and more competition between different approaches, and I'm not trying to get all the PISPs in the same boat. We have every PISP in Europe as it stands today, to my knowledge, are competing with each other. There is none of them are whatever collaborating. They're all competitors. So this is not about getting them all into one big PISP, because then we would have a bigger scale. It is about creating a framework that we could have more of them and have them grow each individually. I don't want to, I'm not in this, or this framework here is not about getting them all merged together into one.
No, I don't think anybody's saying that. But I mean, even within a scheme or within a commercial arrangement, you have competitors who work together under particular rules. Right?
Yeah, but you know, in a scheme, you have two sides or multiple sides. You have a multilateral scheme. So you have there got to be whatever the common interest, and maybe the common interest is something like SPA. So where then you have that scheme. So the SPA scheme is indeed a possibility to bring PISPs, maybe not together, but to bring them into the possibility to have like a one contract with all the thousands of banks, not with the other PISPs, but with the other side of the scheme, you know? So you have the two sides of the scheme.
Sure, but what would this whole thing look like from the retailer perspective? Because in the traditional four corners side, the retailer has an acquirer. He pays some fees to his acquirer. How would it look like?
Yeah, well, it is the classic. We're not talking about changing the PIS business model. It is the same business model. The PISP is acting on behalf of the merchant. Is a merchant service. So for many who don't understand, it is typically not a service to the consumer, it's a service to the merchant. So we are like an acquirer for the merchant. So we are charging the merchant a fee for helping the merchant to initiate a payment that the customer then has to authorize, and then the bank has to execute. But it's the merchant who initiates with the help of a PIS. So we are. It's a service to the merchant, and of course, it therefore competes with all the other services or all the other payment methods on their checkout page, and therefore we got to be as cheap, if not cheaper, as fast, if not faster, as much certain as all the other ones, and that is one of the key issues, as I said, has been the certainty.
And you would not need any enrollment from the consumer side, from the payer side.
And exactly, absolutely no enrollment. That's the point. So the beauty from the merchant's perspective is that it is an account-to-account payment with all the advantages of like a push payment, and without the downsides of a pull payment, with all the chargeback and the risk and the fraud and all of that. So you have all the beauty of an account, and you can reach. It is open for everyone. If I'm as a merchant, if I add a pay by bank, open banking checkout point, everyone who comes onto my page can make that payment. They don't have to sign up, not with me, not with the PIS, not with anyone else. As long as they have one of those 400 million payment accounts, they can make that payment. First time.
And how do you solve then, because you've been raising hell about that for the past couple of years, those 400 million accounts all have different SCA customer journeys and whatnot.
Yeah, well,
how
you know, one of these objectives here has been, well, what do you call it? The ECB was saying a single customer, pan-European reach and customer experience. That was the number one objective: pan-European reach and pan-European customer experience. Now here we are the only one who can actually do this pan-European reach, because we have all those 400 million payment accounts. No other payment method has that. And now pan-European customer experience. Now here's the thing. So there is many hundred different ways of doing SCAs, unfortunately. But each customer has typically only one. Mm-hmm. And wherever they go, in whichever shop they shop,
their familiar
whichever other country they go and shop there, they will always have their home bank SCA experience.
SCA thing.
It's the home SCA. It's the home payment flow, essentially driven or dominated by the SCA part of it, that they have. They have the same experience. The customers have different experiences, but each one has the same wherever they go.
Okay, but how are we going to beat the contactless debit customer journey experience?
That's a very smooth experience. Yeah, exactly. That's the benchmark.
Well, you have to have a so you can't have a flow where you have to enter your IBAN. Obviously ridiculous. You can't have a flow if you do a QR code. It's already at a disadvantage versus NFC, we know. But nevertheless, I think there is a case, and there is some, more and more people are using these codes. So I think QR code is not that bad. From our perspective, the way we've designed this ERPF in terms of creating the best possible flow, the proposal that we put on the table is actually based on Bluetooth, because Bluetooth allows more data to be exchanged between the customer phone and the terminal of the merchant. So there is more bandwidth. There is more information that can go back and forth. For example, NFC is rather limited in terms of that bandwidth. So, which is the reason why the merchant, an NFC checkout identifies the payer, but not the merchant. So as the payer, I'm not actually I can't be sure that it's actually that merchant. Okay, when I'm in a physical store, I'm pretty sure that this terminal will not cheat me, and I'm at the right merchant. So which is why that is maybe not that important. But the more we're looking at identity, the more we're looking at combining the payment with maybe other things. Yes, I'm 18 or whatever. So that communication exchange is important. And there is more and more required. And NFC is like a one tap to go. If you can't, and some of the data you can't do in one. So you would need two taps, which is already then not good. Also, you have to go to the checkout, to the cashier to do it there. While Bluetooth, you would have all of that. You could be anywhere in the store. You could just walk in, walk out, and everything without queuing up anywhere. The big downside, technology-wise, so far, is that it is shaky in the build-up, which is why in our design you use a QR code to facilitate the connection. Not because it's needed, but it's because to make the connection more imminent. Anyway, so it's too technical. Yeah, but
if I may put a question, how are you? I mean, on the consumer side, you will probably win the heart and mind of the consumer, but the heart and mind of the retailer is much harder to win because it's about money. I've always learned from retail that we love innovation, but don't come to me with new innovative products unless they are better, faster, and you best it cheaper than what I already have. So how are you going to win the minds and hearts of the European retailers here?
Retailers, I think, from the ground up, love the idea of open banking. It doesn't have that many parties. It is usually cheaper. It is a push payment. It has many, many advantages. For example, also it helps retailers to not have to deal so much with the data, because, as a push payment, I don't have to get the customer data. I don't have to control it. I don't have to secure it. I don't have to go through all these PCI triple tests, whatever overhead. I don't have the chargeback problem. There are so many problems I'm not having as a retailer with account-to-account payments. So I think there is a long list of advantages, and as long as we make sure that it's not more expensive, I think they will want to use it.
But one thing,
the one big question mark around open banking is the payment certainty. That is the big question mark. That the fast flow.
Right? Yeah.
So it's not the reach. So we are best on reach, and we are probably best on price, but the conversion. So it's the third, or actually it's the second element from a merchant's perspective. The conversion is where we have to get better. And that's where we need the standardization and having these tools work together more technically. The SCA, the Bluetooth, and all of that has to be slick and fast.
I'm least concerned about the merchant, quite honestly. I mean, they have the lower costs, they have more direct interaction, they have instant, irrevocable payments. I mean, that takes a lot of huge reach, as you say. The thing that I do, maybe you can help me there, Ralph. I mean, Request to Pay has been a scheme which has a lot of the things that you also tick, right? Instead of having this ghastly machine that comes at me in the restaurant, I put in a plastic card and type in numbers and the Wi-Fi doesn't work. This ghastly experience that we now have. Request to Pay, I could just pull out my banking app and the restaurant says that'll be 80 euros. Do you want to add a tip? And it's done, right? It's a modern way of doing it. How does ERPF compare to that?
Well, it is an alternative, actually, because every PISP has its own version of Request to Pay. So we have a Request to Pay solution that we offer a merchant. If the merchant signs up, he has access to our platform, and the merchant requests the payment, and the PISP is then initiating that payment through PSD2 APIs at the bank. So it's each PIS having their proprietary version of Request to Pay, and participating in like a scheme, an open scheme like the SEPA Request to Pay of the EPC is therefore not really a necessity from a PIS perspective, because you're doing it anyway. However, and that's, I think we'll discuss maybe in more detail sometime here. The reason I have participated in this SEPA Request to Pay multi-stakeholder group to make it relevant also for TPPs and not just for banks, because what you described works perfectly for banks. So you don't need a PIS anymore in this scenario. But in order to make it relevant for TPPs, there is a solution, and it was actually implemented. It's part of the rule book that as a PISP, you're dealing with the initiation of the payments, etc. But now you don't have to sign up every single merchant or biller yourself anymore, but you can use SRTP scheme to reach the other side of like the billers, the merchant aggregators, the biller aggregators, the merchant aggregators, so you can use them. So you're basically getting your request not from a single merchant, but from an aggregator through SRTP rails, and then the PIS puts it onto the PSD2 rails to initiate the payment and get the customer authorize it and agree to it.
Well, that's nice. Yeah. Ralph, Gijs, do you have anything else to add? Because we're gradually getting towards the end of our time.
Well, no, none other than that. I do believe Ralph's thinking is one ingredient to reach the pan-European payment solutions, next to bank-led, consortium-led solutions or interoperability-based solutions like EMSA. I think it's all complementary, and I mean, pan-European payment solution will not just come up with a big bang at whatever point in time. And maybe the digital euro is a unique thing, but let's keep, apart from that one, it's going to be a long and winding road with different speeds. There is no European customer. The needs are different in every country. So it's going to be a long road, long converging road to something truly European. But we have to cater for everything just to keep all these volumes European for better days. I mean, it sounds a little bit negative, but there is no silver bullet that will give us a private party-based payment solution in the coming 5 to 10 years. It's going to be and it's going to be EMSA, it's going to be EPI, and it's going to be open banking-based solutions, and then it will still not be perfect, but that's probably the most realistic scenario.
Yeah, that's probably a fair summary. Ralph, do you have anything to say? Do you want to make one last comment about why?
Yeah, no, but I think SPA is absolutely key to what you just said, Gijs. So, which is like our first attempt to get that things working together and to turn it into a win-win. So now we need a SPA 2 or SPA 3 or whatever that would extend to include the initiation of a Bitham payment or a whatever other EMSA payment or an EPI payment or whatever. So, and I think the main thing is that we avoid spending more and more money into creating new additional infrastructures and rather focus it on making the infrastructure that we have better, the APIs better, and usable by everyone, not just TPPs.
Yeah, that the APIs aren't working well is, of course, a fundamental problem that we still have, right?
That's still some work to be done there, I guess.
We'd address that in another episode. Okay, I think time to wind it up. Thank you, Gijs and Ralph. This was rather dominated by Ralph selling his amazing new, not scheme, but framework. And so it sounds exciting. We could really use some innovation in that space. So thanks to everybody watching. Thanks to my co-presenters here. And look forward to seeing you at the next episode.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.